Now, each PD array could give you this same framework. What constitutes this market going higher here? The rejection block and the logic that maybe SMT divergence framed with this pair or market expected to not make a lower low. So it's going to go higher. Wait until it breaks market structure. It does there. And then what happens? Wait for it to come back down to an order block and fill in the imbalance here. What are you expecting? You don't expect that low to be taken now because the what? Rejection block has already shown you that your SMT divergence, which I'm not showing here, but I'm telling you that's what would be the framework, the logic behind the scenes, the underpinnings of the marketplace. This low should not be traded beyond, and it should just start just going higher. So that high break in here, that's a market structure break. So when it trades back down into the order block, you've watched me do this. You watched me do it many times in the mentorship where I'm recording myself, giving the annotations, typing in, here's what's going to happen. It's going to react here, starts going to building up. It's going to do this. I'm drawing lines where the order blocks are, and it goes right down and kisses that level and it starts to go higher. Folks, you've watched that. You've witnessed this many, many times. What do you do with that information? Well, if you want to win Robin's Cup, if you want to win, Joe Schmo's tavern in the back, trading contest, and you really want to get into a competition and not talk about how you supposedly had a competition with people that don't even know who you are. You want to do it legitimately. You can do it like this and literally rip the doors off of their Buick. Okay, they won't be able to compete, but you have to know what you're doing. Okay, and by having these weapons in your arsenal, they're high-end weapons. They're weapons of mass destruction. And that means if you don't know how to handle them properly, they will blow you up. So you have to be very, very versed in everything I'm teaching here. Do not be in a rush to go into your trading and try to do all these types of things. I have lots more to talk about with this and teach that type of thing. But you all have to spend time as charter for a little while in the lessons that I haven't taught yet. And as we get closer to the next fall, okay, in the forum, I'll outline some things and some details on how you can go in using Optimal F the way I interpret it, okay? Because I don't do it exactly like Ralph Vince outlines it, and I'm not fully bore going head on like Larry Williams where he's trying to just do the maximum position size he can do all the time. I think that's asking for suicide, and that was the number one reason why he kept getting hurt. And if you can Google his broker statements. They're on the internet. And you can literally see where he got in at in every one of his trades and the size of his trades. The recipe, okay, this is one of those moments where I tuck something in a video. You only have to do 12.5% a week. Consistently every single week. And you will blow Larry Williams' record away. If you look at what Larry Williams was doing, he was just betting heavy, 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 heavy. Okay? If you do 12.5%, you're going to be over 60% net return on the month. Now, 12.5% a week, you might look at that as thinking, man, that's like I can't do that. Well, then you have to split it over 5 trading days and say, okay, if I get one setup that pays me, I don't know, 10, 12 pips. You can do that on a 1-minute chart. And you try to just get that 12.5% divided by 5. And that's your daily objective. And you do that. Now, here's the thing. If you're going to be in competition, you do it with the London session and the New York session. Because you have days where you're going to miss a trade. You're going to get it wrong. But you have to be systematic about it. If you do that, once you hit your 12%, even if you have extra days left in the week, it does not matter. You stop at 12.5%. The next week, you do the same thing. By doing the session in London and the session in New York, and you're trying to get 10 to 12 pips, like, that's easy. Like, that's really, really easy to do in any pair, in any market. If you're trading indices, man, like, you don't need that many handles. Like, It's so easy to find setups that offer you 10 to 15 full handles, or 10 pips, or 12 pips, or 15 pips in Forex. If you're trading futures, it's handles. And if you work towards 12.5% each week, you will rip the wheels right off of Larry Williams' record. And you don't have to be in there trying to get these grand slam home run trades like he was trying to do with his trading. And you don't need to go full bore with the risk. Like he was putting on huge positions, enormous leverage. You don't need to do it that way either. He suffered in the 1987 crash, which was really not that big of a deal compared to today's volatility. But he was at $2.2 million. And he got hurt, and it fell down to $700,000. And by the end of the year, he traded that $700,000 back to $1.2 million, and he won the Robbins contest in 1987. But his huge drawdowns was attributed to his huge positions, and they were really, really big leverage. And you can do it that way, but it takes a lot of luck to be on your side to do that. And that's why his losses and his drawdowns were really horrific. Like they were like, I don't know if I can stomach that. And I've had some really cowboy moments early on in the 90s, but to trade like that, I don't think I could stomach that. And he admits that he wasn't a good person to be around during that year. He was stressed out. And I can see why. It's a lot of yo-yoing. But trading like this, using higher time frame setups, not trading like he would put in an order at the open and hold for the day and maybe the next day or the next day after that. That was his trading style. Because he's kind of hoping he's going to get the daily range. You don't need the full daily range. I'm teaching you high frequency trading. I'm teaching you that through a demo account. And you see that pattern repeating over and over and over again. So the setups that he's waiting for is on a daily chart. So the intervals for a new setup is limited to, at best, 5 a week for any one particular asset class. Now, don't get me wrong. I'm really oversimplifying how he was trading. I'm just giving you like a broad brush, comparison. Compare that way of trading competitively, okay? Because say some of you want to do the Robbins Cup, some of you want to do, Olympic style things, and that's great. I would be so proud to see any of you just place, on the leaderboard. Hey man, I already got a student. Up there. He won the stock division, and it's not a lot of percentage, but hey, guess what? I have a student up there, Mr. Garner. So he won the stock division, and you have nothing but opportunity on these lower time frames. And here's the beautiful thing with that lower time frame: if you control yourself and your frequency of trade, you don't overtrade. You specifically go in looking for setups that offer you high probability and runs to low resistance liquidity runs. Remember, this is supposed to be a short video. I get caught up in these things. I can't help it. But let's say you miss an opportunity and you're trading short-term trading opportunities like Mr. Williams was doing in 1987. Man, you got to wait. Who knows how long until the new setup forms? It might be nothing the rest of this week. Now, take this to a intraday chart where you're working inside of an hourly chart, maybe a 15-minute time frame market structure, and you're aiming for 10 to 15 pips or 10 to 15 handles in indices. The volatility we had today was nothing like that when he was trading. Like, it is easy to find many trades in these lower time frame charts today because the volatility is so, abundant. So if someone sits down and says, I'm aiming for 12.5% a week, none of you should aspire to do that like right now. You don't have it. You don't have the experience. You don't have the skill sets. You don't have what you need to know how to do. But I'm introducing it to you now because I promised it would come. And here it is. It's as simple as looking for something like this, just with one PD array. But I strayed off a topic earlier. I said we could do the same idea with any of the PD array. Like this is an old low taking out what? Sell side liquidity. So while this is a 5-minute chart, and this was the hourly chart here as it passes down into the rejection block here, you have this old low here. So even if you weren't looking at this as a rejection block, because that's not what you want to use, you already know that below this low is what? Sell side liquidity. And comparing this low to that low with the dollar index or cable, if this is euro, and it's not euro. I'm just suggesting to you that that's the, man, I tell you, this mouse. That low seen here on the 5-minute chart, I don't know why this thing does this, but it's pissing me off. So we have this low, it takes the sell side liquidity out. That's a turtle suit. And then you wait. Does it run back up and take out the high? That's it. That's all you got to do. You could be a buyer on that, yes. You can buy the sell side liquidity on the SMT. Or wait. Use it as, okay, now I know I have a setup forming. Wait until market structure breaks and then come back down and get the order block at the imbalance. Optimal trade entry here, there, boom. Now you can be a buyer and then look for all the down close candles to support price. And pyramid, if that's what you want to do. And nobody will ever come close to you if you know what you're doing, if you know how to engage, and you know where the market's drawing to, and you're building in positions like this. Man, well, you've watched me. You've seen what I've done with demo accounts doing it. It's unmatched. You can't keep up with that. And it was all done with lower time frame entries, not daily, all 1 and 5-minute setups that repeat multiple times a day, over and over and over again. You just got to know the ones that are highest in terms of probability. And how do you know that? By experience, tape reading, paper trading, demo trading. That's how you get there. That's the order. That's where you go through it. That's why I tell you, yeah, it's going to take you 18 months to get extremely good. Can you be profitable in less time? Yes, absolutely. You can get profitable before 18 months. But to be proficient, to know what you know, and nobody's going to tell you what you've been able to acquire in terms of your understanding and knowledge, and that experience can't be stripped away no matter how many times they insult you. That's around 18 months. That's the fair horizon that everybody should focus on when they first start with me. But I've had students that come in here in a couple months say, you know what, I've cracked this thing for myself. I know what I'm looking for, and they're profitable. What does that mean? Does that mean you are inferior as a student? No, it just means that they had more experience and something clicked in their mind and it helped them. Everybody, the results are going to vary, folks. No matter what you do, whether it be me teaching you, somebody else teaching you, Larry Williams teaching you, the results are going to vary. But how you train yourself and the submission to the process, that has to be the same for everybody. And then your unique personality is going to creep in, as it should. And you let that steer you into the model and approach that you want to trade. A lot of you don't want to do lower time frame. Okay, it's fine. You can win Robin's Cup type of contest without trading intraday. You can short-term trade. There's nothing wrong with that. You're just not going to have a whole lot of setups, and your frequency will be lower. But look at the highest one right now. A gentleman from Italy, ran real quick up into first place, and he's smartly just sitting still because he knows the guys below him aren't going to try to break their necks to come out of their seat. And he's got like 405%. So 405% with a couple weeks left. He's got it. He's won it. And congratulations to him. But that's like the highest that we've seen in Forex division. So if you start, like for instance, as a side project, okay, none of you in here that are new 2021 group members, okay, none of you should try to go into Robin's Cup next year. You don't know enough yet, Okay. Even if you think you do, please just don't do it. And to prove that you don't, start a demo account with whatever amount at the beginning of the year on January 1st, if that's how you want to do it. I wouldn't start trading until February, but whatever. Say you start a demo account, a brand new one in January, and try to do what you think you would be doing in the Robbins Cup trading with live money and see how you fare at the end of the year. Okay. I think that would be an interesting thing to see what each of you would do. Collectively, everybody. Just see what you can do with it. And have that as the idea that this was how I would trade if I was competitively trading. You're not trying to trade a lot. That's not what competition trading is. It's trading well. It's not over leveraging and abusing risk and leverage. It's trading well. Okay. It's not about how much you have per se, because I've seen a lot of people. In fact, last year, another Italian guy came out of nowhere and just ran really fast up, fell short just below 1,000%. And I told my son, I said, he's gaining so much each day. And when he loses, he's losing like 50% or close to 50%. So he's like full bore maximum margin call is his stop loss. And that's how I used to trade as a commodity trader back in 1993. You don't survive with that. And sure enough, when he got to 900%, he's thinking, I got to get to 1,000% minimum. And then he never returned back to 900s. And it was like 4 more days of updating, and then he was off the leaderboard and never showed up again. And that was unfortunate, because if he just would have sat still, which is, I even put it on, if I'm not mistaken, I was on my community tab cheering him on. I was like, just stay still. Don't do anything. Nobody's going to be able to come up where you're at. And he would have won. But greed and, competitiveness, I guess, has kicked in, and thinking, well, I'm going to keep doing it. In competitions, you don't want to do that. Especially like Robbins. Robbins is, unless you really are going after